So Twitter was down quite a bit after reporting its quarter four earnings. I first put together this slide in the after hours after the presentation. They're down 20%. And actually closed down 24% for the day. And that's Thursday. And I actually think that they're still actually a little overvalued at this. So in this video, I just want to discuss, one, why they fell so much after reporting earnings, and two, why I think that they're still overvalued. Okay, so Twitter mostly fell on slowing growth, and what this means is that Twitter added 9 million monthly active users last quarter. That means 9 million new people signed up for Twitter and used it monthly, in addition to their old users continuing to use it monthly. And that's not exact. What probably happened is, Twitter has about 300 million users. Some of the old users quit, and they added enough new users to more than make up for the ones that quit, to the tune of 9 million. And the reason this was seen as a big disappointment is because, based on Twitter's valuation, they really need to have about 500 million active users around the world if they're going to, have that market cap that they had. So when they're going from, 290 million to 300 million in a quarter, for a fast-growing tech platform, that signals, hey, we might never get to 500 million, and if we do, it's not going to be anytime soon. So that's why the stock fell so much. Another thing that really bothered investors, and it would bother me significantly if I was a part of Twitter's corporate staff, I worked for the corporation. What bothers me the most is that Twitter's total home feed views actually decreased over the quarter. That means the total number of times users looked at their homepage on Twitter to see, what everyone else is tweeting and that sort of thing. And if monthly users are up but total feed views are down, that means that competing services are effectively stealing users' attention. And this is not something seen elsewhere, just because Facebook just reported great statistics for the quarter. They're having good page views still, they're getting more users, they're making more money. So Facebook's doing great. Twitter, to post this, decrease in views, it's not a good sign. And they actually beat revenue expectations by a large margin, but that was not enough to make up for this 24% loss that we got in a single day. And that's just because Twitter is getting better at monetizing its users. That's all that means. Once Twitter is monetized on ads, and they created this ad network. That doesn't mean they make any money until people actually sign up to use the ad network and buy ad slots. So it takes some time for that kind of thing to get rolling, especially since ads are sold on an auction basis, which means, the more advertisers interested in a platform, the more the platform can charge. They sell the spot to the highest bidder, just like anything else. Any other ad works the same way. And as a result, it's natural for the revenue to increase as more advertisers get comfortable with Twitter's platform and how to advertise on it. So this big jump in revenue means nothing because the revenue is way too small for Twitter itself, and Twitter is never going to get the revenue it needs to justify its valuation without adding a lot more users. So that's why I think Twitter is really overvalued. And what I think is that if once Twitter's out of the growth phase, assuming it can make great margins just because it's an internet company, it doesn't have a huge, fixed cost. Most of its costs are in research, paying, top tier staff to come and develop new things for the company. They really need about $5 billion in annual revenue to be worth, the 30. And that's at its current valuation. If Twitter is going to be worth, $27 to $30 billion like it is today, they really need $5 billion in revenue. And that's just assuming that they're going to be able to take, 25-30% profit margin and end up with a P in the high 20s, kind of like Google. If they're going to have a valuation like that, they're going to need to pull in $5 billion in revenue. And this past quarter, they did about $250 million. And that's the December quarter is always the best quarter because holiday ads just drive up the price of internet advertising by a lot. So, they're on pace to make $1 billion out of, the 300 million users. So then that's how it inflates slightly as Twitter gets better at advertising and monetizing its users, but it's not going to go up 5 times. It's going to go up some, but they need more users, and they can't have decreasing page views if they're going to, actually ever grow into their current valuation. And since the only way to get to this valuation is through more users, and users aren't materializing, the stock plummeted, and it deserved it. And there's what I want to discuss finally is that Twitter is still trading at a high premium based on its valuation, and it just doesn't deserve this because it's such a high risk stock. High risk stocks don't get premium valuations. A company that has a clear path to growth like Chipotle, they're going to keep selling more burritos. They're going to keep opening new locations. Eventually, they're going to raise their menu prices. They're going to start rolling out shop house locations. They've got a reason to be trading at a premium. Twitter doesn't, because there's no guarantee that they're going to, ever get to that 500 million users they need. Just because, two reasons. One, Twitter has low stickiness. And what I mean by that is, compared to other social networks, there's not a huge incentive for Twitter users to continue to use Twitter. It makes their user base very susceptible to competition. And what I mean by that is, let's compare Twitter to the other two major social networks, Facebook and LinkedIn. LinkedIn, people are never going to go away from because they need it to apply for jobs. That's the new thing. If you want to white-collar work, you're going to have to apply with your LinkedIn profile. Indeed.com is a big job site. LinkedIn.com itself is a huge job site. And all the other job sites sync with LinkedIn, so you can pull your resume from LinkedIn into the job site. One job hunting platform that's really picked up in popularity lately is Indeed.com, and it syncs with LinkedIn. So users can, even if recruiters are using Indeed.com to recruit, they're still also using LinkedIn. And LinkedIn is just, the recruiting is going higher and higher there. The job market's good. LinkedIn stands to make a lot more money, and people are going to keep using it because they have to get jobs. So Facebook, people like to use Facebook over the long term because they invest a lot into their Facebook account. When you make a Facebook account, you go out and recruit all your friends, for one, and you add friends so that they can see your pictures and posts, and so you can comment on their posts and pictures. Secondly, speaking of pictures, people set up elaborate photo albums that have all their friends' comments on them, constantly sharing pictures, and that's all viewable in the timeline and through the albums. It's very easy to go through and see all the work that you've put into your profile over time. Twitter just doesn't have this at all. And what they have instead is this messaging platform where your messages have no long-term value past an hour. Over 90% of all interaction from a tweet occurs within the first hour. So when a Twitter user tweets for 10 years, let's say 10 years, that's a little extreme. Let's say they tweeted for a full year. All their tweets in the past, that means nothing. Nobody sees them anymore. No one reads them anymore. Compare that to Facebook. You put up a year's worth of pictures. You have that album that people are going through, and it's something that people like. So the other thing is with friends versus followers. On Twitter, people don't necessarily, you don't have to be, a friend is not a mutual thing on Twitter. So it's like on Facebook, you want to recruit everyone to be your friend so that you can see their pictures. Whereas on Twitter, you don't have to. You can just follow someone and they don't follow you back. There's not that same exchange there, where it's like most Twitter users just follow other users just to see what they're tweeting and actually don't contribute to the site at all. And that sort of thing is just why that there's not much value in the Twitter account. Most people don't go out of their way to get followers. They sign up for an account. They follow a couple friends that are active. Most people don't actually tweet. They'll follow their active friends. They'll follow a couple celebrities, and they'll follow some blogs that they like. Like I post updates when I make a new post on Twitter, and they'll follow some celebrities. But that's it. It's just a site that aggregates all this information in one place. Users might follow my blog. They might follow, CNN. They'll follow a couple news sites that they like in different areas. Like Deadspin and sports sites are very popular too. They'll follow a sports team or two. They'll follow a news site. Follow a couple blogs they like. Follow a couple celebrities, and they actually don't tweet. They just receive updates as they come out. So what's the harm in quitting that? If you get tired of the updates, you just quit. See, Twitter, it's when you quit Twitter, it's like unsubscribing from a newsletter that you no longer have time to follow. It's not like Facebook where you can't just, nobody wants to delete their Facebook account. They've worked on it so hard. And they've got all their friends, they got all their pictures. They can't just walk away. They might take a break, but they come back. And that's just the main difference in stickiness. I kind of went on a little rant there, but I hope that helps clarify why Twitter is not in the same league as Facebook or LinkedIn. And speaking of that, there's a lot of very popular mobile apps that really compete with Twitter hard, much harder than the other two sites. And that's namely, I'm talking about WhatsApp, I'm talking about Snapchat, I'm talking about Instagram. But really, WhatsApp is, for some reason, gets the least press, but it has the most potential out of all of them. WhatsApp actually has more users than Twitter, has over 400 million active users. And what it is, it's an instant messaging tool that you can form groups up to 50 people in like chat rooms, and it sends the information, the data plan in the phone, like a group text message, but it's instant, doesn't take up text messages, and everyone with a cell phone or a smartphone can use it. So since everyone has a smartphone, you can just get in a chat with your friends and have instant communication. Then you can send free text messages to individuals. And in the chat, you can easily add video and pictures and links. It's just a much better platform for sharing with friends than Twitter is. Twitter is better for following people that you're not friends with. So that's where Twitter is really hurting to WhatsApp and why they're losing views, is Twitter is no longer a platform that people communicate with their friends. And in this earnings call, Twitter was like, oh, well, we got to make this new platform. And really what they're saying is, well, we got to make Facebook. Well, you're not Facebook. Facebook's already got that. You need something else. And you can keep Twitter, but whatever they do, they're just not worth $30 billion. That's the bottom line. They don't have Facebook. Twitter's not Facebook. And Twitter is, out of all the networks, I think it's going to struggle the most to find its long-term footing. And it might, but why take that risk with your investing dollars? If there's a good chance this network's going to fail or just never generate the kind of revenue it does to justify its current valuation, why would you want to hold the stock? If you want the social network, buy Facebook or LinkedIn. I'm long LinkedIn, even after their earnings report today. I'm still long, and I'm short Twitter. I mean, I'm not going to take a short position in Twitter, but I'm certainly not going to own it. So I hope this video was helpful, and now you have a better idea why Twitter reacted the way it did, and why this is a stock that I don't recommend owning.